What's up, YouTubers, market participants, and day traders? You just stumbled upon my channel where I'm going to review my day trades daily. So if you're new to the game, you're struggling to make money, and you got a small account, you found your boy. Go ahead and like, comment, subscribe. Definitely join the family because AKA Will the Wise, AKA Will the Market, and AKA your boy are here. Let's jump into these trades. What's up, market participants? It's your boy. We're back with another episode. This is gonna have a rule for profits, right? And obviously we're gonna get into that. Let's go ahead and start. So today was actually a very quick day. It was 3 trades. It was the third trade I was done in like 30 minutes. So it was a pretty quick day. Love to see it. Love to see the two that I hit out the park give me some good amount of money, and then the one that I failed on, I lost 66 bucks on. So as you can see, that was the proper risk management I tried to take. And so here's kind of how I'm basing my trades. I'm basing them off of 5 trades a day. Since you have a small account, you want to take less trades, but more calculated trades. So if I were to take 5 trades with what I had was 1244, that would have given me 248, right, per position. And that would be also with the add, because there is a technique where you have to add it each position, right, when it's starting to work. Today you're gonna witness me not do that because I actually over leveraged myself on all 3 trades, I believe. So not really a good day in that aspect, but still two of them were good to go, which caused a 67% hit rate out of 3, 225 up. So let's take a look at the first trade. I always go over my losses first. So I went for ARM here, and this is the 5-minute chart. And basically what I wanted to do is this giant green bar here. That was my buy signal, right? So that's telling me, because I'm thinking we're going up, right? That's telling me, and I like where it started. It started here on the 200, right? The 200 moving average is this white line that goes across. That is the strong, that is the big daddy, that is the boss, right? Whatever happens from the 200 should be respected, right? So I see we come down into this 200, and then we get this huge shot up, right? This huge green candle. The green candle is big, but what is the problem with this green candle? It's still within all of this data. We're still in yesterday's bottom price, yesterday's top price. We didn't even get above the opening. So honestly, this was not a really good buy signal, so I shouldn't have taken it. However, I did enter 23 seconds late. 23 seconds into this red bar. I wanted to obviously get into this bar, but getting into that bar, I put my stop down here under the bar and also under the moving average. So if we go under those, then that's it. Play's done. Play didn't work as well as I wanted it to, is what it is, right? So ticks against me here. Next candle goes against me here. Bam, out of the trade. Stop is hit. Stop is violated. Trade goes into the books. So the trigger was good. Position was a little too high. I came in with 2 contracts at 120. We just showed you the math. I should have stayed under 248. That is with the add. So no room to add here, technically. No room to add here. Is what it is. It says I had 2. It must have broke this line down in 2 sections, so I just didn't get that section. So entry was good, loss was okay, but the power bar was in yesterday's range. This shouldn't have been a trade now that I'm looking at it. I mean, I saw it earlier, but definitely got caught up in the motion, and that happens as a trader. Your job is to funnel those out as quickly as possible and only go for clear setups, right? So took an L on that one. Let's go to my first winning trade. So coin was a huge winner here. It was a sloppy trade though, super sloppy. Nonetheless, it's still a winner, right? So this is yesterday's range, right? And here's the 5 minute. This is the 5 minute on this side, and here's the 15 minute on this side. So as you can see, each candle over here represents 15 minutes. You can see that it's coiling up, it's conducing or consolidating, and that's what this 20 moving average is doing. 20 moving average is coiling into the 200 moving average. So when the 200 and the 20 get so coiled up like that on the 15, and it got coiled up on the 5 minute, look how parallel they are. When they're parallel like that, that means they're sleeping. They're waiting for news. It's waiting for a basically an organization or a whale, basically a big hedge fund or somebody to come in and move the price, right? This is Coinbase, so over the weekend there was cryptocurrency markets. So basically, all of this got bought up. So that's what I can necessarily see is this giant green bar right here, right? This giant green bar coming off of the 200, extending. Now all of our moving averages are going to extend upward, right? So I get in late again by 11 seconds, because that means I'm starting this bar here. I wanted to get in at the end of this bar. So I would have wanted to get in at 34, like, you know, between 40 and 59 seconds, right? Any time in there would have been ideal, right? So I didn't, but that's okay. Still paid 97 for them. And here's the crazy part is I thought the first time I bought them, I only had one contract, but I had two. So then I was like, oh, let me buy another one. And then I realized, oh crap, the order was for two, so now I have four. So sloppy trade in my entry, causing me at a 388. So my position size is very big on this one, bigger than my account, right? Bigger than the 20% that I want per hand, right? Per trade. So I get in here, but you can see quickly we get our first 20% in a minute, sell one for 125. Then I, in the next same minute, same second, it looks like I sold two here. Oh yeah, I remember actually doing that. I put in an order for two there. I jumped the gun there. I shouldn't have done that. Then 3 minutes later, almost towards the end of this bar, I waited to the end of this bar. I got another contract out for 160. And then at the first 40 seconds of this bar, I think it was going a little red, and I was like, you know what? I'm just going to get out. I could have waited to the end of this bar. Obviously, at 44 minutes, 9:44, would have probably the contract would have been at its most value. So I could have waited until the end of the bar. Did not. Further, but the lesson of this video is to take profits, right? Have a rule for taking profits. My rule is at 20%. I'm taking my profit. I'm at least taking off a little bit, right? And that's what I did. So if the trade reverses against me, then I still have a profit, and I'm not getting hurt too much if it goes all the way back down. If it goes down a little bit but then shoots back up, that's good, I believe that's what happens with Tesla. But here's a cool thing here. So I missed the well. This was definitely a well. This is a well moves in two sections. So boom, that was the first move. Boom, that was the second move, right? So I got in on the first move, right? Here would have been my ideal re-entry. Why am I saying that? Because the green successfully takes over a red near the 8 moving average, right? So this green takes over this red, but we're kind of far from the moving average. So look what it resulted in. It was a little extra push-up. But look when the green takes over the red near the moving average. Boom. So this in itself could have been buy 2 contracts here. Stop is here. If we go under these 2 bars, we're out of the play. And then probably my first 20% would have been there. And then I probably, knowing me, because I always fail to hold to the end, I would have probably got out my second contract here. something I need to work on. I'm not working on it this week, but something I want to work on, because this was definitely a whale and I missed it. But that's all right. Made money on the play. That's all I could ask for. Last trade of the day was Tesla. Same thing. Look at how beautiful yesterday's action was. It was consolidating. The 200 moving average is coming down. The 20 moving average is coming up. The 80 EMA is flat. Everything is flat. It's kind of sleeping. It wakes up in the morning and it does this. Boom. Someone's coming in and putting money in, right? So I'm like, okay, I see that you're putting money in. We're above everything. We're above all of the yesterday's data. I again jump in 28 seconds late. I should have been in this bar. These are 5-minute bars. That would have been the 9:34, and I should have been somewhere between 30 seconds and 59 seconds, right? That would have been the ideal entry. Didn't happen. I get in here, still okay. Position size way too big. I bought 2 contracts at 236. It pushes up, and then in the first 3 minutes, I have my 20%. I got rid of one, 290. I said, okay, let's take that. The next candle, this next candle scared the crap out of me. I was upset. I was like, oh man, I just missed my chance for a nice, easy play. Pulled back on me. I just watched it. Then the next candle came, and I was like, oh, okay, we're getting there. And then it pulled back a little bit. I was like, didn't like that. Then the next candle came, right? And it honestly started to go up, and then it reversed on me, and it came down here, and I was like, oh, I hate that. So then I just got out. It hit a new high on the day. So yeah, I got out in 3 minutes and 40 seconds of this candle messing around with me. It was at a high of the day, then it went red, and I was like, oh, okay, are we about to have an ugly reversal? So I just got out. Lo and behold, it just pulls back a little bit and shoots up just that one little tick. But that's okay. I don't care about that. I made my money. My first profit rule was literally the next bar, so I took my 20%. And then I was going to hold back. I had to stop down here. If this was going to pull all the way back, I was just going to break even. The 40, or what is that, $54 I made here, I was risking that $54 on the way down. I believe the contract got down to minus 15, so I was still up $30, and then it reversed, and then I made on that last contract. So stuck to the rules there to hold, wait, took at the first 20%, held, wait, bounced back up. The exit was bad there, but I didn't even care because, it looked like it could have reversed on me and it would have been ugly. So that was that trade, and that was it for the trade. So something I'm working on this week that I noticed all last week, I'm going to stick to the 5-minute chart this week. I'm not going to say I'm not going to go back to the 2-minute. 2-minute has great opportunity on it. It just happens so fast, right? And sometimes I'm not fully awake. Sometimes I'm I can't even blame it on that. Sometimes there's just so much going on that I can't catch all the bars at one time. So maybe the 5-minute chart is going to help me really focus in on the good quality plays, because it's giving me at least 5 minutes to at least see, hey, where did this first bar form on these charts? Where am I? Where can we be going from here, right? So, and last week I got a bunch of paper cuts with 2-minute reversals. Up. It would go up one candle, I go up one candle, and I'm like, all right, we're going in. Jump in. Then literally the next 2-minute candle goes down, and I'm like, oh, okay, whatever. And then the next, so I get stopped out, so now I can't even participate anymore. And then the next candle goes up like this or something like that, and I'm like, okay, if I would have just waited for the 5-minute, the 5-minute would have showed me don't do anything. It would have told me don't do anything, and I'd have been like, oh, okay, perfect, So that is the lesson for today and the week that I'm going to go into this week with. I hope you guys enjoyed it. Like, comment, subscribe. See you guys in the next one. Peace.